Good morning. It is Monday, January 8th, 2024. It's just after 10 a.m. on the East Coast. And you can see I'm in a room that has a lot of light and shadows. So I'm going to take my face off the video in a second, but I just want to let you know I am Rob Sin at CEO Technician on X, at Goldfinger on CEO.ca. And this is at Goldfinger Capital on YouTube. As always, a lot to get to today, and we're going to get right to it. But first, if you find value in this video, if you enjoy these weekly updates, please hit the like button, subscribe, share it with your friends, trying to get good analysis and good information out to a wider audience. And I try to give as much value as I possibly can each week in each and every one of these videos. So I'm going to take myself off the webcam because really all you really care about is my voice and the charts anyway. So getting right to it, stocks get hammered to begin the year. So just looking at the S&P, the IWM, looking at some Apple, Microsoft, Tesla. Last week was not a good week for equities by any stretch at all. Just refresh it here. Up a little bit here this morning. We're starting to see some bounces take shape. There is a decent chance that Friday was a tradable low, but that remains to be seen. But so far, the signs are encouraging. But yeah, it seemed like there may have been some window dressing at year end by the powers that be on Wall Street to, I guess, maximize bonuses and make their performance look as good as possible. And then they took off some of that risk early last week. I mean, we basically saw the heaviest selling on Tuesday and Wednesday last week. Things started to calm down a little bit on Thursday and Friday. Now we're seeing a little bit of a bounce. So a little window dressing at year end, followed by locking in some gains early in the new year. And those gains that they locked in first week of January, those aren't taxable for another year, right? They don't have to pay taxes on those straight away. Whereas if they had done it the week before, the end of 2023, they'd be owing a tax bill now here in 2024. So a little bit of calendar games taking shape here. But last week's pullback in the big indices is it's not getting me too concerned from a bullish standpoint. It seems very healthy, actually. The market had an enormous run from the end of October till year end. I mean, just absolutely enormous. So we could use some consolidation and a little bit of pulling back. So I'm not concerned about that. Looking at different charts, Apple almost got back to its rising 200-day moving average. So Apple getting hit this hard as it did in the last week is very, very unusual. There's some rumors that there's going to be, like an antitrust case against Apple. I don't really follow the story that closely. But for Apple to drop 10%, which is basically what it's done in the last 3 weeks, that's a very significant move. I mean, that's over $200 billion in market cap being sliced off this mega cap market leader. But I would err on the side of buying it down here after this correction has taken place. Another chart I'm looking at is Tesla. Tesla is down. Let's refresh it. I think it's down seven. Yeah, down seven in a row here today. So we'll see how today winds up. But I would prefer to be a buyer here at the 50-day as it pulls back and gets a little bit oversold in the short term. Somewhere in this 230 to 235 range looks like a very good entry point to me and Tesla. A lot of you gap players are going to point out to me, there's an open gap down here at 224. Okay, yeah, it could even get down there for sure. I would say that would be a little bit extreme, and I'd be fine with just taking the chance and buying it at 235 and putting a stop maybe under 220. But I'm just sort of riffing here off the cuff. This is not trading or investment advice. I'm just taking a look at the chart. and I like the support, the confluence of the moving averages between 230 and 235 in Tesla. Um, and yeah, let's look at some gold miners. So let's move the, oh, hold on. Before I do that, a lot of, it's interesting because on X, a lot of people are very bearish here. They're bearish on stocks. They're bearish on gold. They're bearish on a lot of things. And I posted some charts like Bank of America, JP Morgan, American Airlines. And to me, these charts are not indicative of a market that's about to crash or roll over. Yeah, JP Morgan's up big, but this is a bullish trend. And until proven otherwise, it's hard to fade this trend. Okay, Bank of America is down 2% today. Okay, but look at this. It is consolidating, within a very narrow range, like 33 to 34.50 for the last 3 weeks. And that's after a tremendous move off its October low. So in my mind, and based upon my experience and technical analysis and trends, this is a bullish consolidation. Okay, this is not bearish. Um, we would need to see more evidence that this is a confirmed top and it's bearish. Okay, I don't see that yet. I just see these, isolated red candlesticks, within the context of a major uptrend. Remember, guys, one day does not make a trend. If you do the math, if you look at the data, one red candlestick in the context of a 2 or 3 month uptrend is not a short. Okay, it's not a sell. You would rather be a buyer at the close on those down days than be a seller based upon back tests going back 15, 20, 25 years. The data shows play the trend, the uptrend. Okay. So I'm just telling it like it is. I don't have any long position in Bank of America or JP Morgan, but these charts do not look bearish to me at this point in time. I could change my mind 2 days from now, 3 days from now, but right now, the evidence continues to actually accumulate on the bullish side. So gold miners, um, we had this nice move at the end of last year. We got a little overbought there right before Christmas, and we've seen a correction in the gold miners. I feel very similar to how I feel about like Tesla or Apple, to how I feel about like AEM or even just the GDX. We're back to the 50-day. This is still, so let's just draw a little trend line here. It's not going to be perfect, but it's good enough. Okay. Um, Stick with the trend. Okay. Until proven otherwise. This is an uptrend. Higher lows, higher high, higher low, higher high. Is this another higher low? Okay, I'd rather bet on this trend staying intact than betting against it. Okay, so actually I'm long GDX again. Remember last month I got long at like 29.30. That was a very nice, well-timed trade, took profits, and here we go, getting long again here as we correct back to the trend line. All right. So again, that's not a scientifically drawn trend line, but you get the picture. The 50-day moving average also kind of tells the story there as well. But a lot of gold miners have corrected after getting really overbought right before Christmas. And I'm a buyer down here. A lot of 50% retracements and a lot of different gold mining charts, a lot of key support levels being tested out there, 50-day moving average again in Kinross. So a lot of these charts look very similar, and the story is very similar. Pulling back to key support levels, key moving averages, key trend lines, the correction has happened, and now it's time for bulls to step up in the gold miners. And my money is on that they will step up here. So, a lot of market gyrations in the last couple of weeks have been about the expectations for Fed rate cuts, the timing of the rate cuts, the number of the rate cuts, how deep they will be. I think that there's a lot of noise out there, but if we just focus on the important stuff, this is an election year. I would say that's number one, front and center. It's an election year in the US. And the Fed does not want to affect the election in any negative way. So they're going to err on the side of being easier than tighter. We got some hints last week and over the weekend from some Fed speakers that they might be tapering the quantitative tightening. So that means that they will do less and less balance sheet runoff. Okay, they might reinvest more of the runoff back into treasuries to have their balance sheet decline at a slower pace. So that's a pretty big hint. The market is still, even after some of the expectations getting walked back on the stronger than expected jobs data on Friday, that's a whole nother story I'm not going to get into. But we're still a 2 in 3 chance of a March rate cut, and the market is still pricing in somewhere between 5 and 6 rate cuts total in 2024. Who am I to argue with these odds here? I would say that's right. If I had to bet, gun to my head, I would say 5 rate cuts in 2024. So that would get us back to 4.25% by year end. Again, Goldman Sachs, Jan Hatzius sees the rate cuts being front loaded March, May, June, and then after those first 3 cuts, the Fed will be doing quarterly cuts. So that maybe they'll cut again in September or October, and then again. So yeah, I think Goldman Sachs is in for five rate cuts as well in 2024. And the Fed just cannot, between the Treasury debt, the size of the U.S. budget deficits, the unrealized losses on bank balance sheets, the Fed cannot hold at 5.5% much longer. I mean, if they held here even in another 6 months, I think the consequences would be catastrophic. Again, we're looking at a $2 trillion U.S. budget deficit in 2024. That's after a $1.7 trillion budget deficit in 2023. The government is drunk and being extremely spendthrift, and $34 trillion debt with other liabilities, unfunded liabilities totaling more than $70 trillion. I mean, it's mind-boggling. So the Fed is not going to stay tight here, guys. We're going to get cuts, and gun to my head, I would bet on a rate cut in March as opposed to the Fed standing pat, but I don't say that with a high degree of confidence. But all it will take is another poor jobs report and a tame CPI print, which we'll get later this week, and you can pretty much bet on it then. Okay, so as far as metals go, I just want to keep it simple. Gold and copper, gold and copper. Gold, the timeless store of value, the metal that central banks are buying hand over fist, especially central banks in the East, China, Russia, Turkey, et cetera, et cetera. Even Poland is accumulating a lot of gold. And then copper, the metal of infrastructure, the metal of human progress. Just keep it simple. Copper and gold, copper and gold. You don't need to get fancy and get into rare earths or even lithium. Just copper and gold. And copper gives you an EV play as well. There's a big EV side to the copper story, but it also gets you a global growth story, a rewiring of the global power grid, new infrastructure. All of that stuff benefits copper. So Goldman Sachs on copper. Where is my Goldman Sachs copper report? Here it is. Okay. So just read this. This is absolutely fantastic from Goldman Sachs. And basically, the probability of a pretty sharp rate cutting cycle from the Fed with a resilient U.S. growth environment is very favorable macro environment for copper. And then you have like the Cobre Panama stuff, where you just suddenly have massive amounts of mine supply coming offline. It's all very, very beneficial for copper. So I would rather go with Goldman Sachs here and stick with the trend. Um, Copper is likely to have a very positive 2024 with maybe some of the performance in the back half of the year. Okay. Um, $10,000 per ton, 12-month target. So what is $10,000 per ton? It's about 450 a pound. So that would be a good performance for copper. I mean, we're about 380 right now, I think. Um, yeah, we're exactly 380. So that's a 20% gain. That's a big move for copper. And then just like looking at copper technically here, bottomed in October, very strong bottom there in October, strong uptrend, and we've corrected back to the 50 and 200-day moving averages. So this is also a very nice technical long setup in copper. So again, I like adding copper exposure. I like adding gold exposure here. We've had a correction. And I did a poll on X. I don't have it up in front of me right now, but I did a poll on X over the weekend, Saturday. And I asked, which price level will gold hit first? Will it be 1999 or it will be 2050? So basically, where's the next $50 move in the gold price here? We're at 2050. And 54% of the respondents said lower. Now, I think most of my followers are gold investors. They're mining investors. So for 54% to swing bearish, I would say that that's a sign that sentiment on gold here is very tame. Okay, a lot of people are bearish. A lot of people are not positive on gold here. They think that this spike a month ago was the top, and they're afraid. Okay, there's a lot of people on the sidelines just waiting for the rug pulling gold. In my mind, that's a very constructive sentiment backdrop for higher gold prices. And while I would say yes, the last 6 weeks has been fairly messy. Let's just look at the facts here. We're at 2037 here this morning, even after gold is down on the day. It's been consolidating above the 2000 level for 5 weeks. Okay, that is very, very constructive. This is a 4-hour chart showing a little head and shoulders top. It's already met the downside target, and it looks to me like we're trying to put in a tradable bottom here. The low of the morning is 2022.70. That actually lines up very nicely with support. So just look here, 50-day moving average right there, 2019.70, and then look over here, previous resistance now becoming support. So it's actually a really textbook pullback here in gold. And that little head and shoulders that did form has already met its downside targets. So we've already achieved the downside there, and we should be zooming out to the longer term charts. Key support levels 2020, which was almost tested here this morning. And then I would say last month's low around 1990 is the next big level. For me to get really concerned here about gold in the near term, I think I need to see gold take out that 1990 level on the way lower. Okay, so I'm very constructive here on copper, on gold, on a lot of minor charts. Yeah, just focus on the fact that gold continues to hold above 2000. And then when it does break out above 2100 next time, it will be extremely powerful because it will have built up all this energy and continue to put in a series of higher lows it will be ready for a big breakout move the next time it gets back above 2100. So sticking just with gold and copper, and actually I'll be at the Metals Investor Forum in Vancouver in 2 weeks, and that's going to be the topic of my conversation: copper and gold, and just stay tuned for how I dissect those metals, the macro trends, and then dig in to some ways to profit from it in a more specific micro way. CYBN. So those who've been watching these videos, no stranger to CYBN and me talking about CYBN. Well, this morning, CYBN put out its news on DMT, CYB004 and SPL028. These are phase 1 studies. The results are excellent. And the real takeaway is this one: combined phase 1 results for the deuterated DMT program support progression to a phase 2 study in generalized anxiety disorder in Q1 2024. So we're going to phase 2 in CYB004, which is CYBN's DMT candidate. Okay. And you can read the news for yourself. I'm not going to go over it all, but the results are excellent, well tolerated, produce robust psychedelic effects, 40-minute experience. And actually, the fact that it is so fast acting and such a powerful yet short experience, less than an hour, makes it more scalable and potentially the gold standard in medical psychedelics. And I'll have more on this. I'll be speaking with CYBN CEO Doug Drysdale in the next week. This week, he's at the JP Morgan Healthcare Conference. So that'll be interesting to see if anything comes out of that. CYBN and some of its other competitors or peers, call it, in the medical psychedelic space have put out a lot of great trial results and data in the last few months. So it'll be interesting to see if something big or even just something notable comes out of this JP Morgan Healthcare Conference, which is the biggest biotech, healthcare conference every year. Something in the medical psychedelic space. Maybe it could be some sort of investment or partnership by a large pharma company into the medical psychedelic sector. We don't know. I'm just speculating and saying that I'm interested to see what's going to come of it. CYBN continues to consolidate here in a very tight range. The resistance is like 42.5. The support is like 37.5, 38. Very narrow range. I'm obviously hoping that it's going to break out to the upside. I feel like it's consolidating at support. But we will see. I've been a little surprised how quiet the stock has been trading. But maybe there's some more to that story that we're going to find out soon. I don't know. So let me get rid of some of these charts to simplify it, and then we'll get into junior mining news. So Endurance Gold is a sponsor of my site, Goldfinger Capital. Just want to put that out there. So consider me biased. Also, I'm a shareholder of American Eagle Gold and Hercules Silver. So just consider me biased on these three companies. But the first one we'll get into is American Eagle Gold. So it's interesting because I've talked about Hercules Silver a lot on these videos. And Hercules Silver is now basically a copper porphyry play. I mean, it's called silver because they have a silver resource that's near surface in Idaho at the project, the Hercules project, where they made the deeper copper porphyry, discovery in October. But it's transitioned from a silver story much more to a copper story, and that's why Barrick Gold made the investment in Hercules, is because of the copper, not because of the silver. Well, American Eagle Gold, again, it's called gold, is also a copper porphyry story as well. It's in BC, so it's not in Idaho. This is in BC, in Western Canada. The Babine porphyry area of BC, basically Western BC, central, west central BC is kind of the best way to put it. But anyway, it's a copper gold porphyry story, the NAC project. And today you can see they put out this tremendous headline hole, 302 meters of 1.09% copper equivalent within 606 meters of 0.74% copper equivalent, right? So if we think back to Hercules, what was the hole 2305 that got Hercules in the market so excited? Well, it was 185 meters of 0.84% copper, not copper equivalent copper. There wasn't any gold really. There was just a little bit of moly, but the hole was 185 meters of 0.84% copper. So this hole, 2317, is 302 meters of 0.53 grams per ton gold and 0.4% copper. Okay, with also a very nice amount of moly, actually a lot more moly than Hercules had in its hole 2305 or any of the subsequent holes. So there's a very healthy moly component to this hole they reported today, 2317. But it's interesting because if you put it all together, the copper equivalent is 1.09%. So that would be higher grade than the Hercules grade, but it's kind of apples and oranges because this is copper equivalent. There's four metals being reported: gold, copper, silver, moly. Small amount of silver, but the gold component is making up a very large percentage of this overall grade. So the gold matters quite a bit. So it's a little bit apples and oranges to compare Hercules to, American Eagle. Definitely similar in some ways, porphyry, but different metal components, but some similarities because a very good amount of copper and you get the sprinkling of moly in both plays. But anyway, this is an excellent drill hole. There's no question about it from, American Eagle Gold. And they have continued to drill out this NAC project. And I'm scrolling down to the diagrams. Where's the diagram? Cross sections. Where's the drill plan? Here we go. So you can see these are the drill holes from 2022 and 2023. You can see the location of them. And this is the hole 17. So it's kind of a scissor hole with hole 2311, which was also a very nice hole. And you can see they're vectoring into some higher grade here at the southwestern area of this property footprint. Okay. And there's also a lot of room to connect this northern area with the southern area. And there's also a lot of room to step out to the west. There's a lot of room to step out to the north from the northern zone. And there's also a lot of room to connect this little hole, this one hole that was drilled off over here, with this zone over here. So there's a lot of open space still to be tested here at NAC. But the drilling to date, which I'm not going to get into all of it, I'm not going to go over each of the 17 holes, but the drilling to date continues to show a very large ore body that with a lot of near surface copper and gold, and by near surface, I'll say less than 200 meters deep, that could be potentially an open pit. Very impressive, wide intercepts, copper, gold, moly. And these are the core picks. And there's some really nice looking drill core. And you'll notice if you actually spend the time to go through these core picks, a lot of the higher grade stuff looks like this: chalcopyrite in a purple anhydrite vein. So sometimes it'll be chalcopyrite and bornite in a purple anhydrite vein. The bornite will make it higher grade, but this is good. This is good looking stuff. Okay, this stuff grades, and there's a lot of it. Just go through really interesting looking core in a lot of these holes, right? And I think the final thing I'm going to leave it because I'm not going to go into the whole thing in great detail, but I'm definitely a shareholder. I picked this company in the CEO.ca stock picking contest. American Eagle Gold Core Assets was my second pick. That's another porphyry type of story in BC. And Ridgeline Minerals, okay, which is another CRD porphyry, exploration story. So there's a theme here. I like the porphyry, discovery stories. So whether it's Hercules Silver, whether it's American Eagle Gold, whether it's core assets, I like the idea of the porphyry model gives you scale, and copper, gold, even a little moly sprinkled in, a little silver sprinkled in, but copper and gold. I like copper and gold. I like big scale assets that majors would be interested in, and porphyry copper gold gives you that. And read this. So this was November 21st. American Eagle Gold closes investment from strategic investors. Teck 19.9% stake in American Eagle Gold. Okay. And this is a nice little one. One of the company's advisors, who's a geo, who's made big copper gold porphyry finds in the past, Charlie Gregg, invested $250,000 in the company at 21.5 cents a share. Okay. So you have, just like Hercules has Barrick as a big investor, American Eagle has Teck, which is a very large mining company, with more of a focus on copper than Barrick even, is the investor in American Eagle Gold. Okay. Endurance Gold, again, a sponsor of my site, Gold Figure Capital. I'm biased and I'm a shareholder. They reported an excellent hole this morning, 5.8 grams per ton gold over 23 meters, including 8.52 grams per ton gold over 12.7 meters. And they also reported another hole that had 5 vein intercepts from the crown zone. You can see, I mean, they're a little narrow, like 2 meters, 1.4 meters, but the grades are very good. This is high grade gold veins, including visible gold here, 9.67 grams per ton over 1.2 meters. So if you added this all up, you'd have like 7 meters of high grade, but these are 5 separate vein intercepts in this hole. So they didn't, report it as one big intercept because they're separated by lower grade. Okay. But definitely worth looking at the diagrams for yourself. This is the hole that intercepted the VG right here, the northern end of Eagle, the southern end of Crown. And this is the headline right here, 5.8 grams per ton over 23 meters right here. And if you look at the longitudinal section, you can see here's the VG, here's the high grade near surface. I mean, this is shallow. This is starting at 9 meters depth. They hit 5.8 over 23 meters shallow. Here's the deeper VG hits, and this is the crown and the gap between the imperial zone and the crown zone. You can see that imperial, they reported some very nice intercepts in the last couple of months, including 8.98 grams over 9.3 meters and 17.28 grams over 4.2 meters. This is open at depth. All of this is open at depth, and this gap between imperial and crown is also open to being filled in. My takeaway is this company continues to demonstrate very high grade gold. This whole area is just pregnant with high grade gold, and they have not sufficiently tested some of these zones to depth. I mean, some of the deepest holes in some of these areas is 300 meters. They recently got down to 400 meters in a couple holes, but there's a lot of room to continue to fill this in. 1,500 meter strike extent across this whole area. And the grades are robust. So I think at this market cap, I find it to be very attractive. That's why I have a large position in endurance gold. And I'll have more on this later. Um, and then finally, final topic. Oh, what is this? Elon Musk. Hercules Silver. So what would a video be without Hercules Silver commentary? Okay, so here's the chart. I don't have anything new on the exploration itself and the interpretation of what's going on there at depth with the four deeper holes that have been reported to date. But I do have some chart observations. We talked about last time, this is an island top. It's an island top. It's the textbook definition of an island top is in place here. And Hercules continues to consolidate near 80 cents. So it's not making a strong attempt to try to get up above $1 yet. The market is watching and waiting for more news. We've got hole 26 pending. The 3DIP is still due, right? So there are some catalysts coming. We just don't know what the news is going to look like and how the market will interpret it. So it's kind of a waiting game again here as the market just consolidates in a pretty tight range. So I had a lot of questions about Island Top and why would I own shares here if this Island Top is there? Because that's bearish, right? Well, a few things. Yeah, it's not good that it traded in this range, churned a lot of volume, and then gapped lower, and it's not really able to fill this gap. So that's not a great sign. Okay. But also, island tops and island bottoms are not very good patterns. They don't have a very high um, value in terms of forecasting what's next. And this is a chart site called the pattern site that I use a lot. It's an old site, as you can tell, but the data is good. So of 39 different chart patterns, one being the best, an island bottom is number 38 out of 39. An island top is 31. Okay. So those are pretty low rankings, right? And the average move, so if it's an island bottom, the average rise is 31%. If it's island top, the average decline is only 13%. And for island top, the percentage meeting the price target for the breakdowns is only 62%. So, and based upon my experience, very often everybody's staring at this pattern and maybe shorting here, and then they get squeezed, right? So we have to think a little deeper. Yeah, just generally speaking, the fact that it traded in a range and it's now gapped down out of the range and it's trading in a new lower range, that's bearish. Just like this gap higher and the consolidation up here was seemingly bullish, but then it got a little bit long in the tooth and we got news, okay? So a lot of people say, well, yeah, but the chart doesn't matter because it's only the drill results that matter. Yes, that's true. The drill results at the end of the day are going to move this stock. Um, and the expectations have been lowered significantly. So I like the odds of buying it being long around 70, 75 cents, betting on the next catalyst is going to bring it somewhere higher into this gap zone. I don't know if it's going to go all the way back to 138, but even if it goes above $1, that's still good for me if I'm buying it at 72 cents, right? So this is my thinking from a trading standpoint. So let's be very clear on the time frames here. When I'm talking like this right now about the island top, about whether it could go back up $1 or back down to 72 cents, this is short-term trading talk. Bigger picture. So let's throw this little chart out the door and throw the island top thing out the door. Bigger picture, we're going to get a few more important pieces of news, potential catalysts here in the next month or so. The market's going to digest that. And based upon my understanding of the geology and the exploration results to date, the anticipation for the 2024 drill program is going to be very high, very high. And the company doesn't need to raise any money, which is usually the thorn in the side of any junior mining company, is that overhang that they have to finance. That's out the window here. They don't need to finance. They have $25 million. They're fully funded for 2024. So I could see a tactical setup here forming where, I mean, hole 26 could be a boomer and it's game on and stock soars, right? But even if hole 26 is maybe like hole 21, it's okay, but not great, I still see potential catalysts and anticipation potentially driving the stock back above $1 and sort of invalidating this island top interpretation, right? And also the fact that Barrick paid $1.10 for 10% of the company, I still think that matters. Okay, I still think that matters. So if I can get it at 72 cents and Barrick paid $1.10, okay, sounds good to me. But this is not without risk, because obviously this is an overhang of shares. There's supply up here. So that's a fact. There is overhead supply at 110, at 115, at 125, at 138, at 150. There's overhead supply. There's no doubt about it. But we're talking about a probability game. The market trading, it's a probability game. And I like my odds buying at 72 a lot more than I liked them buying at 150. Facts. All right. So that's it. That's it for today. I think I got to all the key talking points. Gold's back to 2040. S&P's moving up. Let's check in with Tesla. Okay, little bounce. Let's check in with Apple. Okay, yeah. So, yeah, I feel like we had our correction the first week of 2024, but let's see what happens, because January is very often a volatile month. Let's not be too overconfident. Let's always think about what could go wrong, with our plans and what our risk actually is, and whether we're comfortable with that risk in any position that we're taking, whether it's with a large cap stock or a micro cap junior mining company. But anyway, that's it for today. I hope you guys found value in this video. Again, hit the like and subscribe button, and I hope you have a powerful trading week.